So I wanted to do a video for you today. I was walking by this building. It's a beautiful night, by the way. I was walking by this building and I got super distracted by it because it is beautiful. Look at this brick facade, black trim, nice open windows. And you'll notice behind me that they are all boarded up, and frankly, just shame. So I wanted to share with you, business and property owners, because interest rates have gone up, a lot of people are feeling that pinch, and receivership is something that's obviously the worst case scenario, but I wanted to share with you some information on what it is, how you got there, and what you can do to help prevent your downside. So a receivership sale happens when the bank engages a third-party provider to help liquidate your property. And so this happens when the person with the original mortgage is not making their payments. So that could be from a variety of factors. It could be that revenue is down from you operating your business, or it could be, if in the event of an income property, that your tenant is, you're having trouble retaining and finding a tenant. There could be a change in consumer preferences, and all of a sudden you have a building that you are struggling to pay the debt service on. But rest assured that the bank in general does not want your property. So they are in the business of providing financial solutions, and when a receivership sale happens, this is effectively the worst case scenario, where they have to take drastic measures to reduce their downside. So they had done original measures at the start to reduce their downside by having a large down payment. And so the typical down payment for commercial properties is anywhere from 25 to 30%. It depends on a variety of factors. If it's an existing building, your credit, the overall risk, those sorts of things. But the reason why it is such a large amount is because it allows the bank that buffer. So in theory, if you have a 30% down payment, the bank has a buffer so that the market value can decrease by 70% of the appraised value, and they'll be just fine. So if you find yourself in a receivership situation, the absolute worst thing that you can do is miss a payment and just hope that the bank doesn't notice. The bank is going to notice. So I do recommend all my clients to have a proactive approach when you talk with your bank. There could be a short-term solution. For example, the bank can help you with an interest-only portion, or just a short-term measure to help you get you through a rough patch that you might be going through.